Morning, morning. How's everybody doing? Hopefully you can see me now and hear me now. Had a bit of a stream issue this morning. Started the stream and it didn't start. So apologies for that. I've got, just to let you know, I may have to disappear in a second. So might be a bit of a disjointed stream this morning. I've got workmen arriving this morning doing some work on the house. And basically, I think they've just turned up outside and my wife disappeared off. So if I do have to run off in a second, bear with me. I will only be a couple of minutes and then I'll be back. All right. So just to let you know. Right. So how's everybody's weekend? All good? I've done nothing this weekend. Been a bit of a boring weekend. Did a spin marathon yesterday, which was quite good. So an hour and a half of spinning, which is obviously killed me. I was in bed I wasn't in bed. I was falling asleep at 5:30 last night. Or yesterday afternoon even. It's crazy. But yeah, so had a nice relaxing weekend. Obviously back this morning. So hope you all had a good one. What we're going to do this morning is have a quick look at overview of the market. So we're going to whiz through every pair. And we're obviously going to have a look at the news that's coming up. And we're going to have a look at commitment of traders report. And just have a look at basically where we are with everything at the moment. Look for opportunities this week. So it's a bit of a light news this week. Light news week this week. So Tuesday we've got some news. Let me just grab the news and stick it on the screen. 1 second. There we go. So news-wise this week, we've got 3 o'clock tomorrow. We've got Fed Powell testifying. It's bank holiday today. There's no news today. No red news events anyway. We've got Powell testifying tomorrow afternoon, which may well move the market. Depending on what obviously is said, it could do nothing. It's a bit of a lottery, the talking head news events, because obviously things will either move or not move depending on what is said. Wednesday, 1:30, we've got CPI. CPI does tend to move the market quite often, so that may well be a good event. 1:30 on Thursday, we've got PPI. Again, something that does tend to move the market. Lagarde is talking on 1:30 on Friday as well for Euro, so we might well get some movement on the Euro. Lagarde's... with the Eurozone, there's not a lot that really tends to move when Lagarde speaks, but at some point they are going to come out and say something about the Eurozone and what they're going to do in the Eurozone, in which case obviously we might see some movement. But it's, again, talking heads is really a case of it will either do something or nothing, and there's nothing you can tell until the actual event happens. So just need to be aware of that on Friday. And then we got retail sales for the US dollar at 1:30 on Friday as well. So that's the news for the week. Yeah, pretty flat week for news, isn't it? There's not an awful lot happening. So it's all US dollar based. So we don't have to worry about any other currencies this week. The US dollar is obviously the world currency, so that drives most of the other positions anyway. So we'll see if we get some decent movement this week off of it. We're still fairly flat on the Dixie. Obviously we have been fairly flat for a while, so we might get some movement out of this range this week, hopefully. We didn't get it last week. I was hoping last week we might get some movement, but again, nothing much happened. So sorry, bear with me a second. I've just got to go and let these builders in, so bear with me. I'll be back in 5 minutes. Let me just put a little note on the screen here, so anybody coming in knows. Back in 5. All right, be a couple of bins. Bear with me 1 sec. Hi, back again. Sorry about that. Oh. Right, where was I? Everybody hear me? I am back now. Sorry about that. I got stuck basically with the builders. Where was I with the calendar? So we did cover the news, haven't we? It's thrown me that as. Commitment of Traders report is next. So the Dixie basically obviously is stuck in a sideways range. Hopefully we're going to break out of that at some point this week. Looking for upside moves on the Dixie. We're obviously in an uptrend. Commitment of Traders report this week. We have had some movement. So most of the pairs obviously last week were negative, as we have had for quite a while now. US dollar has been strong, or expected to be strong, obviously. We haven't had the movement north that we were expecting over the last few weeks, but obviously in December, as you can see, the market sort of tapered off a little bit and wasn't particularly entering positions. So January 4th, which is the last data we've got for COT, we had a lot of more money coming into the US dollar. But as you can see, we didn't get the movement on the US dollar. So the market is still long on the US dollar. Canadian dollar, no real movement. Pound is still short, although a little bit less. Euro is exactly the same. The market is just completely short on the euro. Swissy we can kind of ignore because that one gets pumped into and out of on a regular basis. So we don't really tend to look at this one because it's a sort of a temporary mover. Yen is still a short. No real movement on this one at all this week. I was hoping or expecting to see a little bit more, a little bit of a less negative number on the yen. Quite often when we get the US dollar powering up, the yen will get dragged along with it, but we haven't had that happen. So it is still negative on yen, which means we'll be looking for longs against the against the yen at the moment. Aussie dollar is still a short, and New Zealand dollar. If you remember, I said last week we had that flip short for the first time in an absolute age. That again has gone a little bit more short. So basically, the entire market is short at the moment, apart from US dollar. So tradable bias wise, from a COT perspective, basically you are shorting everything against the US dollar, or long in the US dollar against everything. That is all we've got from a COT perspective at the moment. So up to you whether you want to take this into account or not. It's a very difficult sort of situation at the moment with obviously what's going on with Omicron. But the market is very flat. They're not interested in a lot of volatility and risk at the moment, as we can see obviously by the Dixie. And the COT report is reflecting that as well. So at the moment, COT bias is basically long US dollar, short everything else. And this is obviously long term. So at the moment, I'm less inclined to take COT into account. It's really, really simple, isn't it? At the moment, we basically just long everything US dollar wise. But if you look at all the pairs, you're probably better off at the moment looking for trend, moving average trend, and taking that more into account than COT, because basically COT at the minute is basically just saying short everything. And as you can see with most currencies, the moving averages are holding up very, very nicely. So I think at the moment moving average is probably the thing you want to take into account more than anything else. But saying that, if there is a COT bias, I would be more inclined to use that if it's there. So if the moving averages fall in line with COT, for example, on a US dollar pair, for example, that's just another sort of backup, another string to your bow basically to take. So that's the COT report covered. That's the news covered. If we have a load of hammering and drilling in a minute and I get drowned out, apologies for that. Nothing I can do. They're knocking the wall down. But anyway, so we'll have a quick look at the entire market and where we are at the moment. The ADRs today, so far we've had a few hit. So looking at the Aussies today so far, have had a good run. during Asia, but that's all getting unraveled now in basically the London session. So we are just pulling back, but we had some decent movement on all these Aussie pairs overnight. So we'll see what happens today with these pullbacks that we're getting. A lot of these potentially you can measure for bounces. Obviously right there, right now, we're in a good spot where potentially we're going to bounce from the 61.8 retracement. And obviously this is, again, support area here. So this support is exactly where we're putting tails in at the moment. So keep an eye out if you're short-term trading on lower time frames for those. You can use M5 reversal alerts, obviously. Some of these obviously are not going to be quite so good at the moment. This one's got a lot further to come down. So, but all the Aussies have had a pretty good run. So Aussie dollar Swiss has hit ADR today, and obviously it's come straight off of the sort of 100, 125 range. We had this gap fill done. Nice reversal alert, really strong reversal alert, big propulsion candle there. Sort of 8 to 10 pip stop on that one. Already 12 pips down, but obviously running into potential support at the moment with this gap. So that was a good one. Already played out this morning if you took that one. Aussie dollar, New Zealand dollar as a short as well. Again, same thing, big strong push up to the 100 to 125 range. With these ADRs, you do need to bear in mind that you get broker candles at the open. Mondays, these are quite often gaps rather than broker candles. So if you get ADR hits on a Monday and you see obviously a big sort of gap formed on the overnight, that's fine because this is just the new open basically. So that sort of price action looks really, really good for shorts. If you see these types of broker candles put in any other day of the week, you have to kind of reanalyze them a little bit and remeasure them. But we cover those as we go through in the week anyway. So, and New Zealand dollar Swiss. New Zealand dollar Swiss came bang off 100 ADR. Really nice propulsion candle. And obviously that's played back down into the Asian mid-range at the moment. So those are the ADRs we've had at present. So all worked pretty well this morning. Keep an eye on the rest of these, obviously, as we go through the day. But yeah, really good trades off of those this morning. 4 hours, Aussie dollar CAD. So Aussie dollar CAD, really, really big extension. We looked at this one last week. I took an initial position on this on Friday. I think it was somewhere around there. So we looked at this gap as being the next potential buy zone. Really, really nicely extended on the RSI. We got down to the 20 level. When we get down to this level, typically is the start of the next buy cycle. From a retracement point of view, this looks good. Just looks good across the board, basically. So initial position was taken at 61.8. We have pushed down further back into this buy zone, which given us a little bit of rejection, retesting at the moment. So we'll see if we get continued downside on this. If this continues to grind down into this area, I'll be looking to enter an additional position there, waiting for the move back up. So it's still looking really, really good, Aussie CAD as along. CAD Swiss. CAD Swiss basically massively extended back up into this gap as well. This gap here, which was formed from there down to there, was retested straight away. So when it's been initially retested, I don't tend to pay as much attention to them, but we are really, really nicely extended at the minute up in this gap. So really potentially a good rejection point up here. Lots of big target areas below to aim for, and it's our first tap above the 72. So if you're looking to getting short on this one is really extended, 75.25 kind of. When we get to the 75 level, this is getting really, really interesting because it shows the market is really exhausted and due a decent pullback. So this one looks like a really good opportunity for a short. The RSI extension we've got at the moment, being up at the 75 level, you can see the previous times we kind of get up here, we tend to have a fairly big drop. This is on a nice downtrend as well at the moment. And this is probably one of the deepest pullbacks we've had for a while on this one since beginning of December. So really nice opportunity for shorts. I wouldn't pay too much attention to this gap as being a strong selling area because, as I say, it's already been used. So the sellers all piled in here, the buyers came back, the sellers defended the position and pushed away, so they've added to their positions already. When we get pullbacks into these zones, it's an indication of the buyers defending and adding to their positions, which has already been done. So there's nothing to say that that won't happen again, but at the moment I'd rather be waiting for the pullback. So drop down to lower time frames on this one and looking for an entry short at some point. CAD Swiss, Euro Swiss. Again, got my sell positions on this one already. I'm selling everything euro. I'm always selling the euro. This one we looked at last week. This is the strongest move we've had on the Euro Swiss for a long time. So this move here was 87. This move here is 128. So it's the strongest push we've had since we went back to sort of August time last year, end of summer last year. Obviously, this is up beautifully in the 24.72 area at the moment. You can see the areas, the lines I've got drawn on the chart are the areas of interest for me at the minute, which is this high here and these highs around here, which is a very strong support resistance area. We've tapped into that beautifully, put in a hammer and rejected. So at the moment we're in a price discovery phase. We've had a strong push up. The sellers have stepped in, rejected price, and at the moment we're deciding which way we're going to go. If we're going to get a continuation euro weakness, which there's no reason why we won't, unless Lagarde comes out on Thursday and says something, or Tuesday, whichever day it is. Lagarde's on Friday. So unless Lagarde says anything particularly bullish about the Eurozone, next Swiss franc strength we have, this thing's coming down. So as you can see, I've got 3 positions on this one. I'm TPing just down at the reversal alert. But if you want to get into this, just had a reversal alert on Friday, and we're sitting in consolidation at the moment. So play on this one to this week could be take out the highs and liquidity up there. Obviously, a lot of people will have potentially got in short on Friday after this final hurrah. So there is potential to come up there, do a little stop hunt and then drop. But we'll see. But it looks really good. Euro Swiss for shorts. I'm obviously already in that one. Pound Swiss, same sort of thing. If you're going to take one or the other, I wouldn't take more than one position on the Swissy, and especially the euro and the pound, as they tend to move a lot in tandem. So Pound Swiss. Beautiful extension, really nicely embedded on the 4-hourly. This one isn't quite as aggressive. When I'm looking for RSI extensions, I like to see big, strong movement that takes the RSI extended, because you tend to then get the big, strong pullback. This has been more of a grind, this one. It's been very orderly in the way that it's moved up. So this could well just continue in a grinding trend and stay embedded on the H4 for a while. At some point, we will get that pullback on it. Difficult to tell, but from a levels perspective, where we are at the moment, we're coming up to a couple of areas where we are potentially going to see some movement. So this area, this high here, and then this high here. So this would be the first kind of resistance zone that I would look for sellers to start to come in at. Failing that, we've got a strong support here, 4-time touch support, which got stopped again and finally got cracked through. So again, there would be a nice area to look for potential drops on as well. So if you're looking to get into this one, it's a good spot at the moment to start looking for entries on lower time frame. About to get a reversal alert on that one potentially shortly. But yeah, loads of downside on it at some point. But I say it's not my favourite at the moment, the Pound Swiss, just because of the way that it's been so orderly in this push. But the pound is bearish. So everything's bearish apart from the US dollar at the minute, as far as the market's concerned. So, we should expect a decent move down on this. This is where the move actually started from here. We created a new low here, and then this is where we made our first new high. So this is where the push started, and this is where we will be looking for extensions or pullbacks rather, if we are going to continue on an uptrend on it. But again, as with the Euro Swiss, we're waiting on the Swissy. As soon as the Swissy has some strength and powers up, this thing's coming down. Pound New Zealand, same thing with the Pound New Zealand. I've got into my first position on Pound New Zealand. We're stuck here. We got completely stuck. Really nicely embedded. Just waiting for a pullback on this one. So this level here is where we basically have pushed up into and got stuck multiple times. So if we are going to pull back, potentially that is where I would be targeting that propulsion candle there. So this is where the buying pressure, the buying move started here in this candle. So you see where the gaps formed. That is where I would expect, if we are going to continue with market structure, to pull back too. So looking good. Pound New Zealand as well. So shorting that back down to there. And then obviously by the time we get back down to there, the 24 will have caught up and potentially push it higher if it's going to do that, obviously. Again, difficult the trading at the moment. All these other pairs, pound is a short bias now with the COT. New Zealand is a short bias with the COT. You know, there is no directional bias. So when you haven't got a directional bias on a pair from a COT perspective, it's literally a case of sticking with moving averages and using RSIs. So if we get an RSI extension to the downside, that's the trend. Take it out of there. Obviously, mean reversion trades back to the mean, and then trend trades back from the moving averages. So at the moment, nice mean reversion to the south. New Zealand dollar CAD, very, very extended on the 4 hour as well. This is beautiful. This is right where we want it to be, down at a double bottom. And it's rejected beautifully on Friday. So if we have a look at this one from a higher time frame perspective, you can see where we've been. We got down to here and rejected higher. We came down and tried again, rejected higher. We pushed lower, rejected higher. We've double bottomed. So this is going to be a beautiful double bottom bounce potentially. We are massively extended on the RSI. On the hourly, we've been extended as well. So you can see this rejection on the hourly on Friday. And we've just put in this double bottom today off of this overnight candle. So looking really, really good as an opportunity for a long, and lots of upside potential on this one. So looking obviously to come back up and challenge these highs. But if you're going to take it, obviously this is where we're going to get our first entry. On M15, we haven't had a reversal alert yet. So wait for that to break, and then potentially looking up there somewhere. So levels on this one to be aware of. Coming back up into this level here. On the hourly, if you measure the move we've had, so always assume the worst. Assume that worst case scenario, what we're going to do is continue in this trend. So shallow pullback, medium pullback, deep pullback, and then continuation of the trend. Or double bottom bounce and just fly from there. We don't know what's going to happen, but worst case scenario on this move, we should get a decent pullback from it, and then continuation. So just look for levels. So this level obviously around here, around the 38 would be initial target on it. But obviously it could go way higher than that. We could just, obviously, you can see where we've been. This is beginning of December. So since beginning of December, or rather since we broke down here in end of November, we're literally stuck in this range, aren't we? Yeah. So assume until we get anything otherwise that's what's going to continue to happen. US dollar CAD, obviously looking for longs on this one. We're nicely extended to the downside. So yeah, US dollar CAD looking like a good long opportunity. It's very weak at the moment still. Since we had this breakdown, we've not had any strength coming through, but we are hitting an area at the moment, which is potentially a good area for trades. So this area here where we broke up into has been supportive, and this area here. So this whole zone in here is where I would initially, when we get down there, look for the bounce. 4 hour, not quite there. That's just 68 extended, isn't it? Yeah, just got the 68 extension on it. So not quite there. But if that fails, it's difficult to tell where we're going to go. But this area down here is the main sort of congestion area I would say we're probably going to head for. That's not really that good. So yeah, somewhere around here. So this one, basically, if it gets the bounce, we should see this one flying all the way back up to the highs. If it doesn't, obviously just need to scale in and wait for the bounce. If we get down to here and we just fly through this, obviously RSI is just going to get embedded and extended, and then we're going to get that sort of bounce coming back off of it. Yeah. So up to you on this one. I would be long on the US dollar. It's not quite as extended as I'd like at the moment. I'd like to see it get a little bit further down. But I might put the EA on this one and go for a long on it. Yeah, so what I'm going to do, I'm just going to put a manual buy stop there at the moment and assume that we're going to get that. Let's do it on M15. So when we get the reversal alert, I'm just going to get long on that one. And then obviously I will stick the EA on if it needs to get into additional positions. But that's looking really good for a long US dollar CAD. It's just not quite there yet. But this is a really, really strong support resistance area. Okay, so that's the 4 hours. Hourlies. We've only got CAD Swiss, which obviously we've looked at already on the 4 hour. So that's extended on the hourly and extended on the 4 hourly. So really, really nice opportunity, CAD Swiss for a short, and Euro CAD, which we've looked at as well. So again, oh no, sorry, we haven't looked at Euro CAD, have we? 1 sec. It was Euro Swiss. Right, so Euro CAD on the hourly. Yeah, so this, again, when we get these big propulsion moves and the gap has been tested, if it's tested 50%, a lot of the time I class this as done. But I say these are beautiful moves when you get these big pushes out and then rejections, and the buyers that have bought here to make this propulsion move defend it and add to their positions to push it higher. Typically you get that move starting. Here's a good example as well. Propulsion move down here, retest, bang, test it again, bang. Yeah. So this is a test of a very old zone, but if they're not out of these positions, the lower the time frame you go, the more these tend to hold. So there's good opportunity for this to bounce from here, but it's the euro, and I hate longing the euro. So I would be much more inclined to take one of these. So the trade from Thursday, that was a much better opportunity to get in. Extensions to the high, because the euro is bearish, very bearish. So, you know, I'd rather be getting in short than long. So up to you if you want to take it. At the moment, as I say, cop bias on the Euro CAD is short against a short. So in theory, you can take it in any direction you like. But yeah, not for me, that one at the moment. It's just not extended enough. If that was extended up to 75, I would probably consider it. So if it does push down harder, but then I'd want a level that I can see to play it off. So somewhere around here for double bottoms. If it gets down to there, might get a bit more interested in it. Right, so that's it. That's what we've got so far for today. Any questions on anything that I've covered so far? Somebody had a question on Friday in Telegram, and I said, remind me on Monday. What was it? I can't remember what it was. Are you in here? Who was it? Was it D? I can't remember. Somebody asked me. question. And I said, remind me when we get in the live room on Monday. And I'll cover it. I'm just scanning through the Telegram, trying to find out what the question was. Where are we? January 9th. 8th. S&P strategy, wasn't it? S&P strategy. Okay. Yeah, so I think you were asking what the actual strategy I was using on the S&P was, and I said I would cover it in more detail. So, propulsion candle strategy for indices. Yeah, okay, cool. Right. Let's have a quick look at that now. So, S&P. So, the way that I passed my evaluation with Apex to get my funded account was basically trading futures using literally propulsion candle strategy or propulsion gap, wide range bar, whatever you want to call them. Basically, it's the propulsion candles that generate these large gaps. So where we've only got price action in one direction, i.e. it flies down and then it flies down again, it leaves the gap. So you can see most of the time when we trade up, price then trades back, and then trades up again and back again, and it's constantly moving like this. And then every now and again you get this whack where it just flies off. And this is basically the sellers entering the market, right? So you can see here we had an accumulation and then a big propulsion candle. So let's use this one here as a better example. So this big propulsion candle here, left this gap. All right. So where the candle that moved down, the candle before and the candle after, those three candles are what we take into account. So where we traded up here and where we traded down here, this area here is the gap. So all this is indicative of is the market accumulating positions and then the market's taking it in one direction, which is where they want to profit. And what will happen is it will either do that and then they will exit their positions and cause price to come back, or they will do that, it will push down, and then the buyers, in this case, will push back hard, and the sellers that caused this move will then pile in and push the market back down again. And this is what we see happening over and over again. Market moved down, sellers entered the market, buyers said, no, we fancy buying, and the sellers went, no, we told you we're going down. Yeah, they reject out of the gaps. So literally on S&P, all I did and have been doing for ages is buying the gaps. So when you see, prime example got a run happening right now, when you see a small accumulation and a push up, market rejects there and rejects there, and then they pull back into this gap and the sellers go, no, we haven't got enough power, the buyers take over and push it back up again. And that's literally what I've been doing, buying the S&P, buying the NASDAQ on low time frame, mainly M5. Every time we get back to a gap. Buy it. Stop goes under the low, and then buy out from there. There's lots of different ways you can trade it. There's no right or wrong. Sometimes it will hit and bounce. Sometimes it will smash through and reject back above. So you can have an entry when it moves back above. You can have an entry when you see a rejection out of it. Using stops, obviously stops just go under the lows there, and then you just ride it. When you're long, let's say, for example, we got long on this candle here because this is the gap. We've rejected it. We've got a reversal alert at the gap, and that's what I've been using, obviously, is the reversal alerts to tell me that the gap is being rejected. So I should have said that bit. Obviously, I use my own indicator. So there's your entry. There's your stop. Target-wise, S&P, goes up. So it's really where you think you can get to. But what you want to pay attention to is any selling gaps. So if you're buying, as I've always been, I don't sell the S&P and the indices. if you're buying, you look at where there's propulsion gaps. So as there's a gap there, we know there's a lot of selling pressure here, right? So when we get to there, if we get some kind of strong reaction out of it, that could be your TP. What you could do, and what I have been doing a lot, is covering it with a break even and assuming that the buying pressure is going to continue. In that case, then you want to look at the next area of potential, yeah? And then if that breaks, the next area of potential. And it literally is a case of, if I scroll out on the chart, you see it clear as day. Yeah, price moves between the gaps. So we have a big gap formed. It comes up, touches, and rejects. Yeah, we have a gap formed here, pulls back into it, and rejects. We have a gap formed here, pulls back into it, rejects, but got slammed. Here, gap fill. So we know that the market moves between these propulsion gaps, and it's literally, this is the buyers and the sellers, and they're the participants in the market. Strong buying, strong selling. One person is going to win. There's going to be a buyer win or a seller win. We don't know which. So it's either going to get there, reject, and come all the way back down, or it's going to smash through it. The ones where it smashes through are the ones you win. So you're either going to have two types of day in indices. You have a rotational day where we don't do a lot, or we have a trend day. Yeah. So the rotational days, you'll tend to get a lot of break evens and a lot of stop outs. But in trend days, you get a lot of winners. So let's say, for example, there's a propulsion candle here that I entered on this gap. Stop goes under the gap. When it comes back and retests it and rejects, every time it hits another gap up here and pulls back, I would move my stop until the trend ends. Market structure, yeah? Market structure keeps going like that until it doesn't. That's where I get out. So I get in and I trail up underneath the gaps that are formed. So here, for example, I get in. There's a gap formed here. Yeah, trail. Assuming we're going to reject. Hopefully there'll be gaps formed or lows formed as we go up, and just trail along with it. And that's where I get out. And obviously trend days in S&P and NASDAQ are very, very, very common. At the moment you can see here, in all of these, there's loads of propulsion gaps. Look at where we are now. Look at what I'm buying here. Yeah. So this one, we rejected beautifully off, but it crashed through, hit this gap. Yeah. Pushed off. Sellers wanted to get through it. Buyers rejected. Sellers tried to get through. Buyers rejected. Sellers are trying to get through. Buyers are rejecting. Sellers are trying. Yeah, this is a strong propulsion area. If this fails, this is where we're going to come down to. The next one. Yeah, and it will either hold or it won't. There's a whacking great sell here. High probability, I think, which is where, as you can see, my TPs are. We're going to buy up into this area, and then either sellers are going to bat it back down again, or they're not. We don't know. No one knows. But what we do know, historically, obviously, is the S&P goes up. So I buy it. That's literally the strategy. Very, very simple. So M5, looking for reversal alerts when we hit decent gaps. Does that make sense? That's all it is. You don't even have to use the reversal alerts if you don't want to. You can use price action when we get down here. So you could use bullish engulfings, hammers, look for wicks, just look for, you get down to one of these zones and you see buying come in, you see a wick form, long wick, you see another whacking great lit wick. There's 3 big wicks in the row here. Yeah, there's buyers. You can tell there's buyers because there's a load of wicks to the downside. That means buyers. Wicks to the upside means sellers. Yeah, so there's all sorts of price action you can use. Wicks, W formation. Yeah, you could use price action patterns out of it. You could use bullish engulfings. You could use hammers. Reversal alert obviously is a longer confirmation, but it's the same stuff. And you can do this on any time frame. So obviously MT4 you can only use M5, M1. If you're in MT5 you can use M1, 2, 3 or 5. If you're using NinjaTrader as I was with Apex, obviously I was trading 3-minute charts on that. But the principle is the same. Yeah. Propulsion candles equal massive strength in one direction. That strength will be defended. And that's literally the principle. Yeah. You know, if you want to take it down to smaller time frames, in there on M1, you had a really nice trade. And the bigger the time frame, obviously, the more stable you will tend to be. Great example here, look. It's that Tuesday. So reversal alert. Caused a gap. So there's the low of that candle. There's the high of that candle. There's your gap. Yeah. Sellers push price down into what? This gap. Buyers said, no, we like this area. Push it back up into the sellers area. The sellers went, no, we like this area. Push it back down. Yeah. Supply and demand, support and resistance, buying, selling. It's how the market works. So all the gaps are showing you is where these guys stepped into the market. And as I said, if you, on Friday, as I said, if you look at this on a platform that's got market profile, what you will see here is strong volume coming into the market in accumulation. Yeah, and then the move out of that accumulation. So in MT4, where we haven't got volume because we haven't got a centralized exchange to trade from, we can use these gaps to show us where the volume was. So the volume was here, and we're coming out of volume, tapping back into volume. Look at this move here, for example. Yeah, see this low? We just came back, tried to get into it again after this push up, and you know, it's just buyers. Yeah, buyers stepping into the market, sellers stepping into the market. Yeah, look at where I got out here on this buy. I took this buy here. Look at where I got out here, and look at where my TP was on this trade. Why was my TP there? Because this whacking great selling zone. It's highly likely after this massive propulsion move, we're going to get rejection out of there. So I got out. So forget risk reward. You know, don't always go for the runners. Look at these zones. Yeah, you buy it somewhere down here and you get out at the next one. Think of them like stops on a station, on a train. Yeah. It's either going to stop at the station or it's going to go straight through it. We don't know whether the train's going to stop or not. Let's pretend that the information board at the station is broken. There's a train coming. We don't know if it's going to stop or not. It's either going to slam straight through it and fly past, or it's going to stop there, turn around and go back to where it came from. If it's an end of line stop. I really don't know that much about trains. It's a bad analogy to use. But yeah, so that's the strategy. Make sense? Any questions on it? So that's really what we've got for the morning. Unless there's any other questions on that. This afternoon, I will be back at 2 o'clock as usual. I'll be doing some S&P trading. My S&P positions and my NAS positions, I should really cover those, shouldn't I, before I go? So from last week, I've got a few positions on at present. S&P, I've got a couple of positions on from here, from the highs. After this move down, I was expecting a push up. We didn't go anywhere. Obviously, we've had a 2-day consolidation over Thursday and Friday. These are rotational days. Remember I was saying about rotational and trend days? Trend day, rotation day, rotation day. At the moment, no idea. Hopefully, trend day. That's what I want. Got a couple of extra positions got in down here. The EA is taking trades for me at the moment, as well as the manual positions I've put in. So I'm building a position basically to go long because obviously we are down in a couple of really strong gaps. And from a 4-hour perspective, we're in the 24 to 72 area, which is where we love to push from. So if we do continue down, you can see I've still got my buy limits down here. So I've got a buy limit down at this gap on the 4 hour. I've got a buy limit at the 72 moving average as well. So if we are going to get a continuation push to these levels, I'll wait to get down to there. And obviously just take the drawdown until we get down there and then out on the rally. And the NAS, similar situation on the NAS. At the moment, I've got a few positions on from here. So this big, strong push down. We didn't get the bounce. We've pushed down below the 72. This area here is potentially where we're going to challenge. I'm hopeful that this is really the bottom that we put in on this one. So it's a critical day for the NAS today. We are seeing decent signs of rejection during London. We haven't managed to take yesterday's low. If you look at it on the hourly, this is the area that I was looking at on that 4 hour chart here. So this is where I'm looking potentially for the last amount of liquidity, but I'd be very, very, very surprised if there is liquidity under here. Long-term investors, possibly, yes. But anybody that is lower than H4 time frame won't be holding anymore on these, I don't think. This was the Santa rally that we were expecting, and this is what I played before Christmas. So if you didn't get out at Christmas, here, when we made new highs, you're crazy. People don't hold over Christmas on the S&P unless you're long-term investing. So either positions were entered there on long-term investment, which potentially they may run. Other than that, I think this is just, and we had some people in the Telegram group on Friday saying, sell the NAS, market's going to crash. These are the guys that are shorting the crap out of this at the moment and are about to get smashed to bits, in my opinion. But so I'm hoping this is the bottom we found here, and they're not going to come and take this out. And today we may well sweep it. If we do sweep it, you can see where I'm targeting. So looking to get up there. If the NAS does come down further, which would be very uncharacteristic of it, but occasionally we do get these blips, this is where we are likely to head. So this move here was a big, strong move after this nice accumulation balance area here, which again, think about what I've just said about what happens. We had a big propulsion move to the downside where the sellers stepped in, the buyers took it back up to here, and we had an accumulation, which is a battle between buyers and sellers. Buyers won. Yeah. So the next battle that's going to take place is potentially going to be down there. But also, right where we are now is a really strong area as well. So nice accumulation support. It's just this area, this whole area looks really good. But we're uncharacteristically weak on the NAS at the moment. So we may well get a continuation push down. But it's these indices are not designed to go down. They go down when there's problems, COVID. Yeah. Other than that, we get deep retracements occasionally to the 200 moving average again, which is down here. So that really would be kind of worst case scenario on the NAS, but I'd be surprised after the Santa rally we had on the S&P. I'd be surprised. A lot of the people that are scaremongering, not so much scaremongering, but have an opinion on the NAS going down are saying, oh, this company's going to go bust, that company's going to go bust. Don't forget, this is an index. It tracks the top 100. If one goes bust, they replace it with another one. It's got 100 in it. It's always got 100. If Tesla go pop, the one below, the one in 101, will step into its place. Yeah, not into its place. It won't go as high as Tesla, obviously, but it will step into the 100. And the same with the S&P. It's the top 500. So if a couple of companies disappear or do really badly, they get replaced by the ones that are doing well. So by its very nature, it's engineered to go up because stocks will always go up. If stocks go down, shareholders kick out management, company gets turned around, stocks go up. Or they go bust and get replaced. As I say, it's an engineered indice that is going to go up. So you just have to find the pullbacks, and obviously you can see the pullbacks very clearly on this. And when we start getting red, typically this is where we start to go long, and then we get the rallies. So this is where I'm buying aggressively down here, but not too aggressively in case I do need to come back down into this zone. So hopefully not, but we'll see. Today's a critical day. Bullish today at the moment. We've had a nice bullish Asian session. London's looking like it's just pulling back again into this gap. So, you know, if you are short inclined on it, that's where you'll be getting short. Failing that, you'll be getting short up there. So up to you. But I just don't like shorting it, as you know. But I will be trading this afternoon, obviously as usual anyway. So I'll be back at 2. Questions, Diamond. I think it makes sense. Practice it in demo for a bit to see any difference between S&P and NAS. NAS is a lot faster. If you're going to use, I don't trade both of these. I trade one or the other. I've traded both basically. Because they both look really good at the moment. But normally I will only trade one. I normally only trade the S&P. I don't trade the NAS. The reason I don't trade the NAS is because the NAS is way more aggressive than the S&P. So the tick increments on the NAS are way bigger. So if you're going to start trading indices and you're starting this strategy, use the S&P, because the S&P is like looking at the 4-hour chart, and the NAS is like looking at the M15 chart. You're going to get way faster moves on the NAS. So I would go S&P rather than NAS. NAS you will make more money out of because it moves faster and your tick increment is quicker, but equally you're going to draw down way faster on it as well. But usually, as I say, I will only pick one. But since we've come back from Christmas, I've jumped into both. But I've only got a small position on the S&P. Much smaller than the NAS. So, but lovely rejection wicks at the moment going in. As I say, worst case scenario, if we are going to have some kind of collapse starting on the indices for any reason, we're going to use these zones. Yeah, so they're not just areas to enter; they're areas to exit. You can see my TPs. Yeah, in here. So if we are going to have a bad time in the first quarter, I will still be getting out here. You can still buy down here and get out on the next one. Yeah. It's market structure. Ivan, do I trade US 30? No, but you can trade US 30 if you want. Same thing. Yeah. Look at the chart of the S&P. Let's do on the daily so it's easier to see. Look at the chart of the S&P. Look at the chart of the NASDAQ. Look at the chart. Yeah, it's the same thing. Yeah, but it's speed. You know, if you're going to go speed, super fast, medium, slow. Take your pick. What suits you? But indices. S&P is the biggest traded, obviously, because it's 500. And the reason the S&P is the biggest traded is because it's the most secure and the safest. Because if you think about portfolio diversification, if you're trading 30 stocks and one of them goes mad, that has a 1 in 30 chance of making a big impact. If you have 100 stocks, like in the NASDAQ, and one of them goes mad, that's got a 1 in 100 chance of causing a catastrophic failure. If you have 500 stocks in a portfolio and one of them goes crazy, there's a 1 in 500 chance of it having an impact, which is why you see the S&P is more stable than the NAS is more stable than that one. Yeah, see, look, where we've pulled back and we've had these deep pullbacks to the 200 multiple times. Yeah, we don't do that here. We hardly ever do it here. Yeah, it's just a stability thing. The S&P is safer. That's why I use it for my investments for long term. S&P for my pension fund, because it's a nicer, more stable instrument to trade. Yeah, if you look at the last year or so, and if you bought every time we got down to the 72, and then you resold it every time you got down to the 72 and entered a new position, yeah, give or take, you've never lost a trade. And you can replicate that on smaller time frames as well, obviously. It does the same thing on smaller time frames. Go down to smaller time frames and stick a 20, 50, 100 and 200 on a lower time frame and see what you see. And then come back and thank me and buy me a coffee. But yeah, so pick one, but don't go all of them. Yeah, you're quadrupling, you're tripling your exposure if you trade S&P, NAS and US 30, and they all will go in the same way roughly at the same time. If you get into all of them, you're tripling your exposure. So by taking one position long, you're actually taking 3 if you trade all of them, aren't you? So pick one. Same as I do with Forex, yeah. Aussie dollar CAD, I go short. Aussie dollar Swiss, I go short. I won't touch Aussie yen, Aussie New Zealand or Aussie US because I am short twice on the Aussie. If I take shorts on all these other Aussies, I'm 5 positions short on the Aussie. If the Aussie goes up, I'm going into drawdown on 5 positions, not 2. Limit your exposure to make sure that you're not overexposing yourself on any one instrument, currency, pair, etc. at a time. You've got to manage your risk, obviously. Okay, so that's it for today. Not for today, for this morning. So hopefully that's all helpful. If you've got any questions, come into the Telegram group. I'm always in the Telegram group, so you can ask away in there. So Ivan, do they correlate to get more clearance if S&P and NAS? I'm not quite sure what you mean by more clearance, S&P and NAS. Yes, they are correlated. You can see they're correlated. Yeah? Look at the chart. Yeah, it's correlated. They go up at the same time, roughly. Yeah? I'll draw it on. NAS. Yeah. S&P. Very correlated. They're the same thing. Just put this one to bed. This is the top 30 US stocks. This is the top 100 tech stocks, which probably most of those 30 are tech stocks. This is the top 500 stocks. All 100 in the NAS also sit in the S&P. Yeah? So if these go up, that will probably go up, which will make that go up. They're all correlated. The S&P has more diversification in it, which is why pension funds and most investors like to trade the S&P. Because you have diversification. You've got airline sector in there, you've got tech sector in there, you've got manufacturing sector in there, you've got retail sector in there, every sector. So there's not one sector that can collapse and destroy the S&P. If tech collapses, let's say, for example, there's an EMP pulse which blows up every computer in the world, the tech sector's dead. The NAS will destroy itself. It'll be down, won't it? The S&P won't, because the airlines will probably be flying. Well, actually, they won't, will they? Because they run on tech. But right, that's a bad example. Retail will still be open, but they'll be by candlelight instead of electricity. Yeah, so, you get the point. Basically, they are all correlated. So pick one. As I say, pick one indice and stick with it. Okay. Right, so we'll be back at 2 o'clock. If you like the video, give me a thumbs up. That'd be great. Helps the stream. I'll be back at 2 o'clock. We'll do an overview of what's going on with the market, what's happened in the London session, and get ready for New York Open at 2:30 UK time. Any questions, come into the Telegram group and can ask away anytime you like in there. And if you've got any questions, obviously you want covered in stream, anything education for trading, candlestick patterns, moving averages, indicators, anything you want to ask, I'm a sponge of knowledge you can tap into. So I'm happy to cover anything. We're all at different levels of trading in our careers. So if there's stuff that you want to know and you want to ask away. But if you ask it in the Telegram group, obviously I can prepare a little bit more of a detailed explanation for you than live on stream. So okay, so have a good afternoon, or good morning rather, guys, and I will be back at 2 o'clock, and hopefully I will see you then.